Hello and welcome to Investment Insight, your clear take on the markets. Let's get started. Today, we are zooming in on a force in the global economy that sounds pretty small, but is actually moving mountains, or rather moving billions and billions of dollars. We are talking about ants.
Hmm.
And no, before you check your feed, this is not a pivot to an insect biology show.
Yeah, far from it. Though, the nickname ants does suggest something tiny. But in the financial world, specifically in South Korea, it refers to individual retail investors. And right now, in early 2026, this colony is aggressive, they're sophisticated, and they are reshaping the flow of capital between the U.S. and Asia.
So we have this army of individual traders, but let's set the stage properly for our listeners. It's February 2026. President Trump is back in the Oval Office. We're seeing new trade dynamics. Tariffs are back in the headlines, and the markets are, let's be polite, choppy. And amidst all this, you have these ants in Seoul making a very specific pivot. But here's the question I need answered first. Why should a listener in Chicago or an investor in Miami care about what a guy in Seoul is doing on his smartphone?
Because of the sheer weight of their wallet. You have to understand, these aren't just day traders playing with pocket change. According to the latest data, South Korean retail investors hold a record-breaking $171 billion in foreign stock.
171 billion.
Yeah.
That's massive.
It is, and the vast majority of that is in U.S. stocks. Think of the ants as a decentralized, crowdsourced hedge fund that holds a massive chunk of the S&P 500 and the NASDAQ. If they decide to hold, they prop up U.S. tech prices. If they decide to sell and bring that money home, it sends a shockwave through the U.S. market and the currency exchange rates.
Okay, so you care about the ants because they are effectively holding up a corner of the U.S. market. That definitely raises the stakes. So our mission today is to track a migration. We're seeing signs that this capital is starting to rotate from U.S. software stocks towards something called AI hardware back in Korea. We need to figure out if this is just a blip or if the ants know something the rest of us don't about the next phase of the AI economy.
That's the question. Is the smart money, or at least the fast money, moving from the software that runs AI to the physical nuts and bolts that make it possible?
Let's look at the numbers then. We'll call this segment the $171 billion question. I'm looking at recent analysis from January 2026. It confirms that massive holding. But here's where I get confused. The data also says that in January alone, they bought a net $5 billion in U.S. stock. That's up from December. If the story is that they're leaving, why are they buying more?
Yeah, it does look like a contradiction on the surface, but if you dig into the breakdown, it's not a full exit. It's what we call two-way risk appetite.
Two-way risk. Break that down.
Well, usually when investors get scared or change strategy, they sell one thing to buy another. They sell stocks to buy bonds or sell U.S. stocks to buy Korean stocks. What the ants are doing right now is they're leveraging up. They're holding on to their U.S. tech winners, your NVIDIAs, your Teslas, because they don't want to miss out on the U.S. bull run. But their new focus, the fresh capital, is increasingly looking at domestic opportunities.
So they're trying to have their cake and eat it, too. They want the U.S. growth and the domestic comeback.
Precisely. Historically, the Korean retail investor is much more comfortable with risk than, say, the average American investor. They're willing to stomach volatility. They aren't retreating to safety. They're diversifying their bets to ensure they catch the AI boom, regardless of which side of the Pacific it explodes on next.
And there's a currency angle here, too, right? Because when you hold $171 billion in American stocks, you aren't just betting on the company, you're betting on the U.S. dollar.
That's a huge part of it. To buy a U.S. stock, a Korean investor has to sell their own currency, the won, and buy dollars. That drives the dollar up and the won down. It's a self-reinforcing cycle. As long as they keep buying U.S. stocks, they're actually devaluing their own home currency.
Which makes their U.S. stocks worth even more when they convert it back. It's a nice trap to be in until it isn't.
Right. But now we're seeing the start of a pivot. And it's not about patriotism, it's about hardware. This brings us to the memory mania.
I love that term. Sounds like a game show, but it's really about the plumbing of artificial intelligence. The data shows that money is moving from small, risky Korean companies into the giants, Samsung Electronics and SK hynix. Why?
Because of HBM, high bandwidth memory.
Okay, we see that acronym everywhere, HBM. But let's be honest, most people just nod along without knowing what it actually is. Why is HBM the bottleneck for AI? Why can't we just use the regular memory chips we have in our laptops?
Let's use an analogy. Imagine you have a Formula One race car. That's the GPU, the processor made by companies like NVIDIA. It is incredibly fast, capable of doing billions of calculations. But that engine needs fuel data to run.
Okay, so the memory chip is the fuel pump.
Exactly. But traditional memory is like trying to fill a Formula One car with a garden hose. Doesn't matter how fast the engine is. If the fuel can't get in fast enough, the car stalls. It creates a traffic jam of data.
The processor's just sitting there waiting for work to do.
Right. HBM, high bandwidth memory, is like replacing that garden hose with a fire hose. But it's not just a wider pipe. HBM is unique because they physically stack the memory chips on top of each other like a skyscraper and connect them directly to the processor. This allows data to move vertically at speeds that are just impossible with flat chips.
So it's a skyscraper of data right next to the engine?
Perfect visualization. And here's the kicker. You literally cannot run advanced AI models, the kind that write code or generate video, without this specific architecture. And guess who makes the vast majority of these chips?
South Korea.
South Korea. SK hynix and Samsung. So the ants have realized that while the US designs the brains of AI, Korea builds the nervous system. Yeah, and you can't have one without the other.
So this memory mania is the realization that Korea is no longer just an exporter of cars and phones, it's an AI hardware beneficiary.
Yeah.
But how does this swarm of retail investors affect the stock price? When you have millions of people acting on the same idea, doesn't that get chaotic?
It creates a fascinating dynamic. Think of the ants as a shock absorber. When foreign investors, big Wall Street firms, get nervous about global politics or trade wars and start selling Korean stocks, the ants step in. They buy the dip.
They act as a floor for the stock price, they protect the downside?
They do. But the flip side is acceleration. When the news is good, say, Samsung announces a new HBM chip, the ants pile in all at once. They chase the rally. This causes the price to shoot up much faster than the fundamentals might justify.
Which leads us to the most important question for any investor. Is it actually a good deal? We'll call this segment, is it cheap? Because just because a stock is going up doesn't mean it's a bargain.
This is the big debate in Seoul right now. If you look at the raw numbers, Korean chip makers look incredibly cheap compared to U.S. tech stocks.
Usually we look at the price-to-earnings ratio, right? How much are you paying for every dollar of profit?
Correct. And looking at the analysis of Samsung's January 2026 earnings, profits are skyrocketing. Why? Because there's a shortage of HBM chips. They can charge a premium. So earnings are up, which makes the stock look cheap.
But I hear a but coming.
There is a massive but. The memory chip industry is notoriously cyclical. It goes through boom and bust phases. The expert analysis warns that 2026 is the year of ROI, return on investment.
Explain that.
For the last 2 years, big tech companies, Microsoft, Google, Meta, have spent hundreds of billions of dollars buying these chips to build data centers. That was the spending phase. Now, in 2026, investors are saying, okay, you built the data centers. Where is the profit?
If the AI software doesn't make money, they stop buying the hardware.
Exactly. If the demand for AI services slows down, the demand for HBM chips drops, and those record profits for Samsung could evaporate overnight. So buying now is a bet that the AI boom is just getting started, not peaking.
There's also this concept of the Korea discount. It sounds like a coupon you get at a duty-free shop, but it's actually a problem for investors, isn't it?
It's a structural penalty. Historically, Korean stocks trade at a lower valuation than their peers. This is largely due to corporate governance. Many of these huge companies are cables, family-run conglomerates.
So even my own stock, the family runs the show.
That's the perception. They might prioritize keeping the family in control or capturing market share over paying dividends to shareholders like you and me. So global investors apply a discount. They say, I'll pay less for $1 of Samsung profit than $1 of Apple profit because I don't trust that the Samsung profit will ever end up in my pocket.
That makes sense. It's a trust tax.
Exactly. And the analysis points out that for a true re-rating, for the stock price to permanently go up, Korea needs to fix those governance issues. A temporary boom in chip sales doesn't fix the fact that investors feel like second-class citizens compared to the founding families.
Okay, so we know why they might stay away, but we also know they have $171 billion sitting in foreign accounts. What brings them home? We'll call this segment the trigger for the Great Migration. What's the catalyst that makes an ant sell their Tesla stock and buy SK hynix?
Well, the government is certainly trying to manufacture a trigger. In late 2025, they introduced tax incentives. Basically, if you bring your money home and invest it in Korea, we will give you a tax break.
Carrots. Governments love carrots. But do investors bite?
Rarely. For tax reasons alone. Capital goes where the growth is. According to the analysis, there are 3 real triggers that would cause this money to flood back to Seoul.
What's number one?
Currency stability. Remember, holding U.S. stock is a hedge against the one getting weaker. If the one stabilizes, perhaps due to policy shifts in the Trump administration regarding the dollar, the fear of holding local currency goes away. You don't need the lifeboat anymore.
Okay, makes sense. Trigger number two.
Earnings visibility. This is simple math. If U.S. tech stocks start to stall, maybe they grew too fast, but Korean chip makers are showing 50 or 60% profit growth because of that hardware shortage, well, the money will chase the growth.
It's not loyalty, it's just looking for the faster horse.
Exactly.
And the third one?
Volatility fear. This is interesting. A lot of these ants are holding leveraged ETFs in the U.S. These are risky bets that multiply your gains but also multiply your losses.
High risk, high reward.
Right. And if the U.S. market gets shaky, say inflation spikes or trade talks break down, those leveraged positions can wipe you out instantly. In that scenario, moving money back to a massive profit-generating company like Samsung actually feels like a flight to safety.
It's like, oh, moving back into your parents' house because the rent in the big city got too high and your job feels unstable.
That is a much better analogy. It might not be exciting, but it's safe, and you know the rules of the house.
But let's talk about the risks. Because even if they come home, the way they invest seems intense. The report mentions that these blue chip companies are being treated like meme stocks. How do you treat a massive industrial manufacturer like a meme stock?
It comes down to behavior. The ants are gathering on forums, sharing info, and moving in herds. The expert insight here is that Samsung and SK hynix are trading like leveraged thematic products.
That sounds like jargon. Break that down for us.
It means people aren't buying the company because they analyze the balance sheet. They are buying the theme. They are buying the idea of AI hardware. They're chasing heat.
FOMO, fear of missing out.
Exactly. And when you have millions of people chasing heat, it creates boom and bust cycles within the stock. The price shoots up vertically because everyone buys at once, and then it crashes down just as fast when the mood changes.
Even if the company is doing fine.
Even if the company is printing money, the stock price becomes disconnected from reality.
So for a foreign investor or an American looking at this market, it must be incredibly hard to predict.
It's a three-factor game. That's how the analysts describe it. If you want to understand the price of Korean stocks in 2026, you can't just look at one thing. You have to watch three moving parts simultaneously.
What are they?
1, the chip of profit cycle, are HBM prices holding up? 2, the supply and demand of the ants. Are they in a buying mood or a selling mood? And 3, the exchange rate.
That sounds like a headache.
It's complex, but it's also where the opportunity is. Recent data from early February showed a fascinating tug of war. Foreign investors were selling Korean stocks, taking profits or getting out, while the ants were buying everything the foreigners sold.
So they're betting against Wall Street.
They are. And historically, when retail goes up against institutional money, retail eventually runs out of cash. But remember that number we started with.
$171 billion.
That is a very deep war chest. If they decide to deploy that cash, they can fight Wall Street for a long time.
This is really a story about the democratization of market power. It used to be that big banks decided where the market went. Now a swarm of individuals with smartphones can hold the line.
Exactly.
Well, we have covered a huge amount of ground today. Let's try to package this up. The ants are a massive force holding $171 billion in foreign assets. They're currently betting big on AI memory hardware at home, specifically HBM chips, while still holding onto their U.S. tech stocks. They are driving volatility, they're ignoring the Korea discount for now, and they are reacting to every shift in the currency markets.
That's the summary. It's a global game of chess played by millions of individuals.
So what is the one thing we should leave our listeners with? What's the final takeaway?
I think the most important takeaway is about motivation. The data suggests the ants aren't bringing their billions back to Korea out of patriotism. They are chasing the numbers. If the AI hardware boom cools down, or if U.S. tech rallies again, that capital is liquid. It could flow right back out across the Pacific tomorrow. In 2026, liquidity is loyal only to profit.
Liquidity is loyal only to profit. That is a powerful thought. It reminds us that in this interconnected global market, money doesn't have a passport. It just has a destination.
Absolutely. And right now, that destination is a stacked memory chip in Seoul.
Thank you for guiding us through that deep dive. That's all for today's episode. Don't forget to subscribe and hit that like button. We'll see you next time on Investment Insight.